weekend all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Friday, and this is the 19th of June, 2020. And since it's a weekend, we do this a little different. We go to only weekly charts on the weekend, looking for the longer term pictures. The daily charts today, interesting, because I saw a lot of markets throwing out reversal signals that are not verified on the weekly, which means we might just be in for some corrections. Now, you know, the news of the day was when Apple shut 11 stores, the market took that, and that's because of the COVID again. The market decided all of a sudden profit taking. Was it more than that? I don't know. So far, the market keeps hearing the news on COVID, and it seems to shrug it off right after the opening. This happened later in the day, and it had that impact. A big reversal in many of the markets, but is the reversal important? Don't know. Gold stayed up, as you can see. You got bids into the TLT. The silver market was up, but most other markets were actually in the red today. So let's take a look. We know that the strong sector in the stock market are the tech stocks. So XLK, still good, up right now for the week, $2.83. Not bad action at all. And by the way, we'll now take the chart and work with it. The swing lines on the weekly are bullish. Higher lows, higher highs. What would break the uptrend is getting through 94.33, and from where the market's at, that's, nearly, $8 away. That's quite a move away from it, but that's what it would take to break the pattern of higher lows, higher highs. Support in the market, back down at 90.32, but to get there, you have to take out 94.33. That would break the uptrend. You'd have a higher high, lower low. So that's not something that I think would be a good thing if it got back there. It would be maybe a stopping point from the 104.89, but certainly not a bullish sign. When I look at where the market might run into resistance, I'll stay here. The upper Bollinger Band at 107.33 is still very much a target in the market. And momentum in the market is still up. It has not turned down. So all systems are still go, basically. You got higher lows, higher highs on the weekly chart. The bias is up as well. By the way, if you get my SPDR ETF video that I put out each afternoon, I've already sent it to all of you that are paid subscribers. You know what I said in that. In the XLI, the industrial sector, it is not trending, not on the weekly chart. You have a low that's under a prior low, and even though the market's had this phenomenal rally, it's still a higher high. So you got a lower low, higher high, flat momentum, and the market has encountered stiff resistance up at the 100 and the 200-day averages. Now, the fear in this market would be, and you were still up 41 cents, but you gave up the big chunk of the week, you're $3 off the high. The big fear would be if COVID starts spreading and factories get it and they have to close down for whatever period of time, redo whatever they're doing, and affect their production. That is the big fear in the market. And seeing Florida, these amount of cases, record amount of cases now in the state, Arizona, Texas, California, monstrous amount of cases, the Carolinas. I mean, folks, wake up. This thing's spreading again, and it's changing where its epicenters are. Obviously, the launch to the upside for everything would be if we had a vaccine, because then forget it. It's just like the flu we get every year. A lot of people die from that, so don't think it's a small thing. But at least there'd be a cure or vaccine. What about the energy sector? Well, we're seeing OPEC do an awful lot. There's another meeting coming up this week. They are making the members of OPEC Plus that are not in compliance, show them when they'll be in compliance and what they're doing, because they weren't in compliance and the other members had to make up that difference. What are they doing about it? We'll find out more, but that sounds friendly. So you've had the higher lows, higher highs, but for the week, you're still down 25 cents. You're challenging support again at the 18-week average, and you can't seem to quite get away from that. Even if this market broke through 34.30 on the current pattern, it would stay bearish. To get bullish again, another leg to the up, you got to get over this week's high, and that high was 41.90. When you take a look at QQQ, it's the never-ending bull market. It's, pandemics were made for the tech stocks at this point in our life. So the Amazons beat everybody. I went today to Macy's to get something for myself. You can't try anything on. Everybody's got gloves and everything. It's very different, believe me. The shopping experience is very different. It was nice to go in a store. I have not been in a Macy's or anything like that for 3 months. So it was a pleasure to go outside and walk around in the city, but you have to wear a mask, got to be careful, and it's not quite the same shopping experience. I think you're going to discover that. But in any case, you're still looking good, and that's what the tech wins on. And the market, if it can clear here, 247.82, watch it. Now, there's going to be some rebalancing of stock indices taking place. Zoom and other companies are going to get much more prominence. So you want to take a look and see what indices this month are starting to rebalance. It's very important. Talk to your broker about it. In the emerging market ETF, we've now got still the pattern of higher lows, higher highs, but you ran into the buzzsaw. This is where the market's going. These are not little bitty moving averages. They have big followings. That's the 200 week and the 100 week. So if you get there, you may not respect them. I do. And I would look for the pros to be taking money off in that area. And that's what they did this week. They started last week and they finished it up. You made it right to within 2 cents of the 200-day average. And you came down from there, and you're down about $3 from that. Still an uptrend. Support back at 57.82. You'd have to take out 54.70 to have a bigger problem. Now, if we take a look at this, as you can see, you had an outside week down. When you have an outside week, learn to recognize what the importance of them is. If you take out the high of an outside week down generally means you're looking for the market to fall further, right? And an outside week is unique. You don't get a lot of them on chart action. When you do, I pay attention. If you take that out, I'm looking for a market to try to make a run to the closest moving average above it or the Bollinger Band, the closest up. Doesn't mean it's going to work. It clears it. I'm wrong if you get back under that week's low. Then my theory didn't work. You got there. I don't know what's going to happen the rest of the way. That was my target in the market. And the market just gave that extra gravy as I see it. GLD, this week's high was 164.08, matching this one's. Now, very important. If we come back to this week, the market hit 164.06. So, what happens if you get through that number? If you get through that number, you, again, probably catch this area, and they're going to see what they can drive with it. If they drive it, is the 170 area a possibility? What is the trend? Well, even if you get through 164.08, you'd have a lower low, higher high, but your momentum is locked in and your bias is up. I think the bulls would grab control of the market right then and there. It's interesting where it stopped. In the minors, the daily chart turned bullish today. The weekly is not yet. To negate the trend of lower highs, lower lows, you've got to take out 35.58. That would stop that. You've already got the bias up, but momentum is starting to drift down. This chart is certainly not as good as it could have been. TLT, is this the beginning of a new trend if we pop higher? If you get over 164.23 on this particular setup, you would get higher lows, higher highs. Momentum had been down. It's now making the turn, and you get bias up. So what do the bears have to do? They cannot afford for this market to get over 164.23. If it does, that would be what I'm looking for. Obviously, then getting back under, if you did that, and then getting back under this week's low, you'd put the chart into no man's land. But it's a possibility of a trend change here. And all you've really done from this big rally is correct to the 18-week average and hold it. You haven't really gone into a downtrend, and on my daily reviews, I think I've been crystal clear. The Fed has made a commitment. They're not going to let parts of this curve yield get out of control. They're not going to let it rise on you. You get another COVID like we're getting, and you start closing things down. You think the Fed's going to get tighter or keep restraints on things? I'll let you figure that out. FXE, like the dollar, it's the flip-flop of the dollar. This market got up to key numbers and just backed off at this point. So I don't see a trend difference. I see a market that got up to a big number in a correction. I see the trend, the longer-term trend is up, but support's far away at the 103.90 area right here. In jets, this is the last chart. This is the airlines. And as you look at them, the manufacturing, the terminals and all, you get a fresh sell signal today. Until you take out today's high, and that was 1835 on a weekly basis now, you've got new sell, lower highs, lower lows, momentum down, bias down. Until that's taken out, the trend is now to the downside. So if you like what I'm doing here, you're probably going to like a lot what I do in the afternoon and in the morning. Whether you trade futures as well as ETFs on their own, doesn't matter. If you're trading ETFs and you're trading the different SPOs, SPYs, DIAs, you do realize you're trading futures whether you like it or not, because they're all based on futures contracts. Same in oil and other markets there, TLT, they're all based on this. But what I do is I try to bring a semblance of order for it. So in the afternoon, I do a full review with you and I give you technical analysis most of the time. I'll even tell you what reports are coming out in the morning for Monday. Well, in my case, it would be for Tuesday. Didn't do it today. I covered other things instead, but typically that's what I'll do. I'm going to cover for you, by the way, in my futures, I do 40 charts. Here, in the different ETFs, I'm up to 34 right now. And I cover all these different sectors, as you can see, the spiders, the stock indices, you're going to get the metals, the currencies, the energies, interest rates, and now I've got a category called others. As I listen to you and you give me your feedback, and I invite you to do that on YouTube, write what markets you want covered, I add them. I'm going to get up to 40 charts here. I've put the package of these two together. The trial to the package costs $16.90, I think that's what it is, for the first 30 days. Yeah, I'm right on that. After that, if you want to stay with it, it's $28. So it's not even $1 a day. And you're going to get thrown in our handheld device, which is the software to work on your Android or your smartphone. My special reports, and I intend on doing a lot more of them. I'm all settled in finally. I'm going to be doing some Zoom webinar meetings, so expect me to do those. There'll be invites to that. That's all now my next thing. So I'm at the next stage where I'm ready to go with kicking all this up. We've had a great success with the launch of this. Might be something you want to try. It keeps these shows going too. So something you might want to consider. In the meantime, I'm Ira Epstein. I wish you all the very best. Great Father's Day to everybody, and I'll see you all come Monday. Take care now.